Hello and welcome to Crypto Weeklies. In this video, we analyze the latest Bitcoin drop. None of the content is financial advice. Let's get started. Right now, the price of Bitcoin is at around 67k. It now sits well below the 2021 high that Bitcoin had at around 69k. So the area that we mentioned on this channel again for last several weeks was first this area of support that was more likely to be breached, which was the 2025 area of support at around 79k. That got breached last week. Now the next area for Bitcoin to watch as it falls down almost in a elevator down fashion rather than staircase down fashion is this white line over here at around 54k. This range of the drop could look slightly different based on you can also draw it as a midpoint over here of this trajectory as well as a first attempt of a support at around 63 to 64k. That coincides with the April to May 2021 high as well. So that 64k could be a next stop in the drop before ultimately dropping to the range lows of the 2024 bear market or the bearish phases of the 2024 year. That area of support is at around 54%. If Bitcoin were to drop to that level of about 54k, that would be in terms of the peak to the 126k peak to the drop, it would be somewhere between 56 and 57%. For context, the last bear market that is in from 2021 November to the 2022 November, that 1 year bear market, Bitcoin fell 77%. One another way to look for is once this range of the bull market lows of 2021, similar in 2025, once that yellow line was breached, how far did Bitcoin drop? In 2022, after that yellow zone was breached, Bitcoin dropped about a 50%. This time around again, if the upside was diminished, if the downside is also getting diminished by the same token, then a 30% drop instead of a 50% drop, roughly speaking 30% drop, gets Bitcoin bottom at around 54k. If instead of 30%, if the bottom occurs 40% lower than this yellow zone over here, the prior years lows, then the price action for Bitcoin could bottom at around, again for this market cycle, at around 45k. That's our base case at Crypto Weeklies as well. You can see the base case scenario for the longest time for Bitcoin bottom was at around price at around 45k. Anything beyond that, around 45 to 50% drop from the prior year's support, price action could bottom close to that 40k level. So that's those are the scenarios ahead of us. If we look at that in terms of the next area of support, that's the 2024 lows. If we analyze and draw a straight line through it, it goes back to the 2021 cycle, especially that August 2021 where the price met resistance, and also in December 2021 again meeting that resistance at that point. In 2024, that same level in July 2024 found support. If price action were to drop to that level of about 50k level, that would bring the price action close to the 300 week simple moving average. This is the green line is the 300 week simple moving average. If it takes couple more weeks, the 300 week simple moving average right now is at around 50,400. The yellow line is at around 51,300. So close enough or within the striking distance within at that level. If the price were to drop to that level, that could usher in some sort of a bottoming pattern where the price, again in the last bear market of 2022, you can see the price action finally when it was closer to that 300 week simple moving average, that's where the bottom for Bitcoin occurred. This time around, that 300 week could easily come into play. Last time around, 200 week simple moving average did not provide any sort of a major support. Only after dropping below the 300 week simple moving average, Bitcoin did finally bottom out. So that is something to look forward to. And from monthly perspective, from that is the yearly, these are the monthly candles again drawn from the 2021 highs. Let's get them started from the January 2020 to open. From that perspective, Bitcoin did drop in that year to date bear market of 2022, dropped by about 65%. A 65% drop from this year's January could take the worst case scenario at around 32K for Bitcoin, which is like slightly better than the 2022 drop for Bitcoin. That's the per correlation per the last bear market. Coming to the our own website, these charts are all available on CryptoWeeklies.com. Link on the bottom of your screen. Looking at the current drop in terms of Bitcoin, let's start with the SMA analysis, the 20-week simple moving average based analysis, and let's only focus on Bitcoin right now. For this model, the current difference between the price and the 20-week simple moving average, in terms of both the time adjusted and volatility adjusted difference, you can see the currently the 20-week simple moving average is at around 96K. The price is at around 66K. There is a 30,000 air gap between the price and the 20-week simple moving average. In terms of proportion as well, it's a significant distance between the price and the 20-week simple moving average. These distances again usually inform. So, for example, over here, the maximum distance between the price in 2022 and the 20-week simple moving average, if you look at the drop in June instead of November, you would find that the maximum distance between the price and the 20-week simple moving average at around 70% delta. The 20-week simple moving average was at around um, 36K, whereas the price was at around 20K. This time around, again, the difference between the price and the 20-week simple moving average in terms of the percentage, again, let's draw it correctly. The current price is at around 66K. It would take a 45% rally to get to the 20-week simple moving average. Again, as the percentages in 2022 were much severe than what are observed in 2026, you could argue that this time around the drop is not that severe. But in terms of the raw numbers and weighting it equally, you can see in June 2022 the risk levels for BTC bottoms were slightly higher than what they are today. So that means in November 2025 and in February 2026, per at least per this model, where we not only consider the 20-week simple moving average raw numbers, but also in proportion, together the risk of Bitcoin accumulation has gone down, as this model would indicate. And that's just one model. The other models of some importance are the DCA model, which take into the consideration the polynomial regression based fair value of Bitcoin. Now Bitcoin has officially gone below and significantly gone below the gray line over here. And whenever that happens in the bear market, like it did in 2018, 2022, and now in 2026, the declines are steep and short lived. So, for example, from May 2022 till June 2022. So now this time around, this drop has come into existence in February 2026. So 2 months prior to what happened in the last bear market. So what I'm looking forward to is again some sort of this elevator down related lows getting over potentially at that 55K level, which is about $10 to $11,000 different differences at around $10 to $11,000 between the current price and that $54,000 level. And then let's see how the bottom gets carved out from there. The remainder of summer could be something similar to 2022, where the price action essentially stayed sideways, and then ultimately another drop in the last quarter of 2026. That's where this model indicates the price action could be. Right now, the accumulation risk for Bitcoin is still at zero point 0.4 per this model. Whenever this goes below 0.2, that's when per this model, at least historically speaking, if you were to only DCA Bitcoin, whenever the risk levels were less than 20%, you would essentially be buying at some of the uh, great times to enter the Bitcoin trade. This hasn't happened yet. One could also increase their risk tolerance, and instead of saying less than 20%, at times less than 30% makes more sense. It provides a longer accumulation window, although not the best prices, but again, longer accumulation window is in most cases more appreciated, because as the price of Bitcoin is more likely to have diminished return to the upside, the volatility to the downside could also be diminished, and that the, the the threshold of returns between from cycle to cycle would likely be lower. So, for example, from 2017 peak, roughly speaking, $20,000, 2021 peak was at around 67, at least 3x of that 2017 peak. In 4 years later, Bitcoin did a 3x. In 2025, it barely did a 2x. One could argue it did not even do that 2x. Had it been 135k, then the price in 2025 would have been 2x of the 2021 price. So less than 2x in 2025, in 2029. Similarly, from cycle to cycle, if the peak is less than 250k, which has which has higher likelihood, as the peak in 2025 was much lower than lower than 2x of the 2021 peak. That accumulation zone for Bitcoin, if it's under 0.3 risk, if and when that occurs, that personally speaking does make some sort of a sense, because nobody knows if the price has to go to the zero point 0.1 risk, or even again, one could make an argument that at least the bottoms need to have at a risk occur at a risk level less than 0.2. But again, nobody knows it for sure. But definitely right now the risk levels are much higher than the 0.3 risk as well. So at this point, this model does not signal a DCA zone. The time weighted average price risk has also gone down quite a bit. Now we can see it's in green zone. It was in the yellow zone and orange zone for most of 2025. It has gone down to the green zone, but it's nowhere close to this blue color or even this neutral color between the lower between darker green and blue color. That's when per this model, at least the severe part of the bear market is over, whenever the color code goes into this neutral green color. Right now we are just starting out into the lowering of the time weighted average price. The time weighted average price is around 28k. Bitcoin has never fell below the time weighted average price since 2015. Again, and most of the bear market bottom occur with touching distance from the time weighted average price, with a 10 to 20% air gap. So a 20% air gap adds about $6,000 to 27,000, gets close to the $33,000 level if Bitcoin were to bottom today. But if, let's say, Bitcoin bottoms in the last quarter of 2026, this 33,000 could well be close to that 40k level per the time weighted average price model. All in all, the summary risk for accumulation of Bitcoin, as Bitcoin is still above the 200-week simple moving average, the normalized risk is not close enough to zero right now. In June, July 2022, or even in November 2022, the risk was less than 5%. Right now, it's at around 6%. Whenever it goes less than 5, or especially less than 3%, that's when DCA below 200-week simple moving average makes some sort of a sense. Right now, if you look at only the 200-week simple moving average, this red line over here, price has a tendency to go below the 200-week simple moving average in the bear market years. So, although price is below the 100-week and the 20-week, personally speaking, again, I look forward to price being below the 200-week simple moving average in the near future. Um, The regression based analysis, again, instead of a daily level, this is at a weekly level, helps identify the overvaluation zone for Bitcoin, like we saw in the bull market year of 2025. Whenever the price came close to the yellow line, there was a huge sell off. Similarly, now that we are in the bear market years, this model says that whenever the price goes below 47k, that would be one standard deviation residual to the downside, and whenever the price is below this green line over here, uh, Bitcoin has essentially been very close to a bottom. So looking forward to the price action being below the fair value like it is today, but significantly closer to that green line over here at around 47k. Right now, this is at 47k because of today's price action, but you can see, as this line were to be extended into the future, we don't have the feature right now, but we will keep on adding those features. You could argue that this green line could be at around 50 to 55k come September October 2026. So that's the whole area between 55k and 45k makes the most amount of sense. The bear market bottom for Bitcoin, as established by these all of these individual risk based models, the base bear case for Bitcoin is at around 43k. The panic case is at around 40k, and the recession case for Bitcoin bottom is at around 32k. With that, I'd like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.